Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. All right, so the bears put together the kind of day that we talked about them needing to put together yesterday if they want to head down and extend this market into another down leg. They put themselves in that position. So you can see lower low and another follow-up low here. That's the current Globex low is 38.78, but the key is on the continuation chart, they've taken out the lows from back on September the 7th. So on the hourly chart, we talked about who is going to win these consolidations. Last consolidation was here. The bulls ramped it. The bears could not let them do this again. Not to say that there won't be balances. I think this is despite popular opinion, this is a very two-sided market. It's a really nice trader market if you don't get all dug in and start taking sides and wearing your bull jersey or your bear jersey to work every day. I never got a statement from any broker I ever had where there were extra points at the bottom because I rooted for one side or the other during the course of the month. It's never happened. If you get those, let me know. We'll all switch over there right now. It's, you've got to figure out who's taking advantage, and you've got to do that. So what did we do yesterday? We spent most of the day long. Most of the day short. We had a nice little long in the morning from 52.5, and then, it was, short 60, and we're still short 46, 47 area. We just roll our stops down to 50. So if they come and get us at 96s, they can have them. But the key to yesterday was they held off this little pop in and around 10 a.m. It went up to 77.5, and then they dumped it. They broke the opening low. They followed up. They defended the hourly mid-band right here between 1 and 2 o'clock, and then they took out the prior low here, and they extended it, and they did lows into the close, extended that down. And Globex has been pretty boring. The volatility hasn't been great. You can see how small these hourly candles are, but it's been a slow bleed down to new lows versus that 38.83 and change. So here's back on September the 7th. So they took that low out. All right, so what happens from here? Well, one of a couple of things. Either you get into a situation here on a Friday where the bid just is not interested. It's like, nope, we're good. I don't want to be long over the weekend, and I'll see you Monday. In which case, the bears have another decent day. Every day doesn't have to be a 3 to 4% train wreck to the downside in order for the bears to do well. I was saying in the room yesterday, the bears would actually do better over a more intermediate period of time if they could just come in, do like 1% to the down, or God forbid, just like 0.6 to the downside, close on the lows, come back, rinse and repeat, and do it again the next day. They would get a lot farther more consistently, and it would wear down all of these dip buyers that are trying to come in because they don't want to miss the boat into the end of the year. That's how you wear them down. Not with shock and awe. Shock and awe, they've seen that a million times. You come in, all right, they're over the tips of their skis, buy it, off we go, see you in 300 handles. Happens all the time. It happened a week ago. We just did 41.75 off of 38.83. Why? Because they got carried away. So what the bears need to do is hold that 3,900 area, which was a problem back in early September. Hold the hourly midband, continue to make lows and try to close below the lows. What do the bulls want to do? They want to get back into 39s to begin with. You want to get back on top of the hourly midband and try to close it somewhere that gives you a reasonable chance at wherever the weekly pivot is going to come out for next week, that you can hop on top of that, turn it into support, and try to get above this 39.80 area that you had every chance in the world to get above and you couldn't do it. So I think that the Bears at this point, is it their best look of the year? I don't know if it's their best look of the year, but it's definitely top 3. If they can just follow through, they're going to get the leg that everybody is just dying to have. But that all remains to be seen. So, what are the key areas this morning? You got volume weighted average price 38.88. We're trading right in and around there now. You see the hourly midband there, 39.03. Our proprietary moving average is locked up with the 5-minute midband in and around 38.84. I think, however this ends, we revisit 78 at some point today. The question is, can they convert 78 and then turn 77, 78 into resistance? If they can, then 38.50. That's gravity. I mean, that's just gravity. On the upside, Globex high is where Globex high is where we opened, 39.04, high is 39.05. I think a reasonable target, or a reasonable, I hate the word target. I think a reasonable day for the bulls would be to close above 39.05. I'm not sure they're capable of much more than that. Like I said, this is probably top 3 best situations we've seen the Bears in this year. Just based and everybody's like, well, it wasn't some careening down. No, they did the careening down. They leveled it off. They chewed off all those bids, and then they won the churn. Now they got to follow through. The more reasonably they follow through, the better off they're going to be. You go off a cliff, you're begging for a bounce. All right. Everybody have a fantastic day. Have a fantastic weekend. Be safe. Be healthy. Take care. Trade them well. Be good. Talk to you Monday.